Oliver, there's big changes at Danske Bank. It's one of the big sort of European banks, Denmark's biggest bank. It's just ousted its CEO and appointed a new man to take over. What's going on?
So yes, Eivind Kolding, the chief executive, who's only been there for 19 months or so as chief executive, he's out now, and Thomas Borgen has come in. He's one of the divisional chiefs. So all change there. It's somewhat out of the blue. It wasn't expected to happen, but the board's decided that it's time for a change at the top.
Yeah, because there are a couple of issues surrounding the bank. I mean, it's had a very controversial sort of rebranding campaign after the financial crisis, and it's sort of rowing with the Danish financial regulator about capital levels, etc., etc. So clearly there's some issues there.
There are, yes, and the rebranding has been particularly controversial. That they had an ad campaign which featured Occupy Wall Street protesters and melting ice caps and break dancing and robots playing football, and there was a lot of dissatisfaction with that and what it seemed to be saying about the bank.
Yes.
It wasn't sort of taking things seriously, and there was a lot of criticism online of this ad campaign, so that didn't go down too well.
Yeah.
Though that was quite some time ago now, that was last year. This year it's been more about a spat with the regulator. The Danish regulator has criticised Danske Bank's risk weightings that it uses when it measures the amount of capital it has to hold, and has told the bank to hold more capital. So there's been a sort of spat there, and that might have had something to do with it.
So what does the new man have to do then?
Well, quite a lot. They've got a target they've got all kinds of targets for 2015, but one of the most important is to improve return on equity to 12% by 2015. There's a long way to go. The annualised rate in the first half of this year was just 5%, so it needs to double its return on equity. And there's a real challenge as to how it's going to get there. A lot of the plan initially focused on growth. They were going to grow lending and hence improve their profits. That looks tricky now in Europe's economy. It looks like it might be difficult to do with that. So they might need to cut costs more than they were thinking of. And certainly the cost-to-income ratio at Danske Bank is much worse than it is at Nordic peers. And those Nordic peers are already making returns on equity in the double digits, so there's perhaps more to go on costs.
Yeah, so it looks like tough times actually for Danske Bank. Clearly a new chief executive has a very full in tray when he arrives at his desk. Thanks, Oliver.